One of the biggest fears Americans have faced over the last 12 months is the looming risk of a recession. And it's hard to ignore, as each of us are impacted by the job market, the housing market, the stock market, and even if none of those apply to you, which is very unlikely, I'm sure there is some aspect of the American economy that does apply to you. But recent data has been released that shows that we may not have a recession after all, at least for the next few months. So stay tuned to go over the ins and outs of recessions, what got us to this point, where we are headed, and lastly, what my thoughts are in this whole situation. So what is a recession? Well, at its core, a recession is a downturn or a shrinkage of the US economy. A common rule of thumb is a recession has occurred anytime there are 2 consecutive quarters of negative GDP growth. And GDP is gross domestic product. And you may be asking, what is gross domestic product? Well, according to Investopedia, GDP is the total monetary or market value of all the finished goods and services produced within a country's borders in a specific time period. More simply put, it's the total dollar value of all the goods made and all the services provided in the United States in a given quarter. So add up the value of all the iPhones, all the Starbucks lattes, all of the contractors that are working on your house for the whole country, and that's GDP. So a recession basically means that in terms of value, the US is producing less goods and less services. And typically, this reduction of produced goods and services results in a drop in the stock markets, slower or stalled earnings for corporations, and higher unemployment. It's also important to note that the National Bureau of Economic Research also looks at other metrics like non-farm payroll, industrial production, and retail sales, among many others, to determine if we are in a recession or not. So there are many factors at play here. But now that we've defined what a recession is, when is the last time we've had a recession, and how long does it take to recover from a recession? And speaking of recessions, the best way to avoid one is to tap that like button and subscribe to the channel. Just kidding, but you should do it anyway. But back to the topic, when is the last time we even had a recession? Considering the demographic of YouTube, most of you probably don't even remember last time we had a recession. And if you do, it's less likely that you were old enough to fully understand the true ramifications of it. The last time the US experienced a recession was during the Great Recession, which spanned from December of 2007 to June of 2009, which was the longest recession in US history since 1960. If you have read or watched The Big Short, which is a great book and movie, then you at least have an idea of what happened. But essentially, this recession was caused by the crash of the US subprime mortgage bond market, which caused massive ripple effects throughout the US and even global economies. And we won't get into the specifics of this one, but essentially the big banks over-leveraged themselves by investing in and issuing risky mortgage loans. And it all went belly up as soon as those risky mortgages started going into foreclosure. And this time period was called the Great Recession for a reason. It was bad, really bad. It is widely considered to be the biggest and most destructive recession since the Great Depression back in the 1930s. But it's important to remember that not all recessions are the same. They're not always as big as the Great Recession, and they are simply just part of our economic cycle. I don't know when the next recession will be, and I'm not in the game of trying to time the market, but I do know that I will experience multiple recessions in my lifetime since they are just part of our economic nature. So take a deep breath and know that no matter what, a recession will occur eventually. But based on historical data, our economy will recover and will continue to grow. Here are a few stats about recessions that will hopefully put your mind at ease. Statistic number 1. Since 1948, there have been 11 recessions in the US economy, which comes out to about 1 recession every 6 years. So these happen relatively frequently, and we are probably overdue for a recession anyway. Statistic number 2. According to a study done by the University of Chicago, recessions often follow economic booms. And the length of a recession is typically 2.5 months for every year of economic boom that precedes it. So this tells us that times of economic prosperity typically last much longer than times of economic downturn. And statistic number 3, and this really isn't a stat, but more so a common business philosophy and saying, and it is that millionaires are made during a recession. And I mentioned this for a couple reasons. And reason number 1, investments made during a recession typically grow faster because you are buying low or buying at the bottom of a market and then catching that wave of appreciation as the economy recovers. And number 2, many business opportunities present themselves during an economic downturn. And as the economy recovers, people typically see their new company grow very quickly. And I think a big reason for this is decreased competition. Everyone wants to be an entrepreneur during an economic boom. The money seems to be flowing and everyone wants their piece of it. And while it's true that the money is flowing, there's so many more people that are trying to get their hands on it. However, during a recession, it's not as cool or flashy to be an entrepreneur. It's viewed as risky and irresponsible. And while starting a business will still be challenging, you are getting a head start on everyone else, and it will start to grow as the economy recovers. But anyway, I hope that helped get the idea across that recessions are normal and they happen. And they aren't always fun, but they can present a lot of opportunities if you are looking carefully. So where does that leave us right now? Fears of a recession continue to grow as companies announce disappointing earnings, individuals experience layoffs, and investment markets decline or stay stagnant. But on April 27th, the US Commerce Department report revealed that GDP rose in the first quarter of this year by 1.1%. And while this is lower than the 2% forecasted growth that was expected, it was still a strong and positive report. And by the definition of a recession that we covered earlier in this video, we are not in a recession yet. And there's good reason that we won't be one in quarter 2 either. The report also stated that consumer spending rose by 3.7% and that underlying demand is now positive after remaining flat in the fourth quarter of last year. But does that mean we're in the clear and completely avoided a recession? Not necessarily. We're still in the process of battling record inflation that was brought on by the economic stimulus during the pandemic. And as the Fed continues to raise interest rates to battle that inflation, business performance is on the decline. And these interest rate increases may continue for the foreseeable future. And this could also lead to higher unemployment as more and more companies plan layoffs to deal with slower business. So while there's reason to be optimistic, there's also good reason to think that a recession may be on the horizon still. So what do I think of all of this? Well, I think I've already covered that, but my main advice for you is to stay calm, don't panic, and make small but measured decisions. Let's break it down into a few easy steps. Step 1, turn off the news. The media is designed to get you to watch. That's how they sell ads and make money. And the more doom and gloom they put out, the more eyeballs they have. And that's not to say everything they say is false, but it's oftentimes exaggerated. So keep yourself informed, but don't let yourself get sucked in too much. Step 2, build an emergency fund. The next best thing you can do is to make sure that you have 3 to 6 months of expenses saved up so that you can cover your basic needs if your income gets reduced or completely cut off. That will give you a huge buffer that will help you make it through until you get another paycheck again. Step 3, don't do anything with your investments. The only people who lose money during recessions are the people who cashed out. Like we talked about, recessions are shorter than times of economic prosperity. Leave your retirement alone. You'll be very happy you did, and you'll save yourself a lot of heartbreak. And step 4, be very careful with big decisions like a move or a job change. Typically during layoffs, the new people are the first to go. So don't job hop unless the new opportunity is going to be excellent for your career. And if you're getting a huge raise, go for it. I don't want you to be paralyzed with fear, and if you feel like you have a good opportunity, you should still take it. But if you're just going for a 5% salary increase and you don't really know what you're getting yourself into, you may want to hold off for now. And that's all I've really got for you. The most important thing is to stay calm and don't rush into any decisions. Set yourself up so that you can weather out the storm. And remember, after every winter, it is always followed by spring and summer. And that's gonna do it for this video. Make sure you hit that like button. And if you like this content, make sure you subscribe to the channel. Thanks.